How about those interest rate hikes and those interest payments? Where's this taking us?
As far as getting out of the system or what to do, you want to become as self-reliant as you possibly can. You need to have the mindset that there's going to be a 2-week period of time, or 2 months, or 6 months. I have no idea how long once this thing goes down, how long it will take to reboot, but there will be a period of time where if you need to dial 911, nobody's going to pick up the phone, because when the financial system goes down, when credit is unavailable, the system itself will not operate. Just understand that with gold and silver, they cannot bankrupt.
Feels like a good down and a money down and a telecoms down and a everything down potential period. You have to prepare as if all networks that you rely on will be disabled for a while. Would you concur with that?
Hello, and welcome to Crypto Street, where we bring you the latest and most intriguing stories from the world of cryptocurrencies. Now let's begin our enlightening discussion with Bill Holter.
How about those interest rate hikes and those interest payments? Where's this taking us?
Well, it's taken us to bankruptcy, to default, whatever you want to call it. We're basically now, interest rates are back to where they were in 2001. And if you go back to 1982, when interest rates peaked out, you'll see that each time rates came down and markets overheated, the Fed would raise rates and could never get even close to where the previous peak was. And they'd break something in either the economy or the markets. And when they would break something, then they would lower rates again. And they kept doing that all the way to 2019, 20, when we actually got to a point where rates were basically at zero, and in parts of the world, rates were negative. Now what the Fed has done over the last year or so, they've raised rates continually, and they've wiped out all the rate cuts that they had done since 2001. And when they raise rates, they're putting stress on the system. They're putting stress on banks. They're putting stress on brokers. That puts stress on derivatives, and that's over a $2 quadrillion market now. So what they're doing, and in my estimation, they're not doing this by mistake. They're doing it by a plan. I think it's the takedown of the system. They will ultimately implode the entire financial facade. Well, you want to get out of the system. I do want to add to that opening statement that as interest rates have risen, bond prices have dropped. And understand that the entire system, the foundation for the entire financial system, is debt. So what they're doing is they're hollowing out the foundation itself. You've got banks, you've got brokers, and especially insurance companies are holding all of this debt that is devaluing. It's well below par now. You have some bonds that are trading at 70, 80 cents on the dollar. So what that's done is it's made the foundation weaker and weaker, while at the same time they're adding more and more debt onto the system. So it's a double whammy. The foundation is weakening, yet the debt load itself on top is getting heavier. As far as getting out of the system or what to do, you want to become as self-reliant as you possibly can. You need to have the mindset that there's going to be a 2-week period of time, or 2 months, or 6 months. I have no idea how long once this thing goes down, how long it will take to reboot, but there will be a period of time where if you need to dial 911, nobody's going to pick up the phone, because when the financial system goes down, when credit is unavailable, the system itself will not operate. Nothing will work without credit. So just understand that there's going to be a point in time where you're going to have to go it alone. So you want to get yourself, your physical self, as self-reliant as you possibly can. And you want to protect your capital. And the way to do that is to get it out of the system. If you hold stocks, have the stock certificate gets issued and ordered out to you. That way you hold the certificate in hand. If you have a big balance in the bank, You don't want a big balance in the bank. Banks, the FDIC since 2014 has language written in their charter now where they're not going to do bailouts, they're going to do bail-ins. And what that means is they're going to take some of your money to cover the bank's losses. So you don't want people or entities between you and your money.
Don't forget to join us as we continue to explore the unfolding events. Now let's look at the latest news in the cryptocurrency market. Then we turn back to Bill Holter. Bitcoin prices must break $100,000 for crypto miners to stay profitable. Pepe Coin, Floki Inu, and Palmer Doge may rally in next bull run. Largest Bitcoin wallet belongs to stablecoin giant Tether. Asian economies could benefit from reduced dollar influence, says Devere CEO. Russia recognizes digital currencies of other nations. JP Morgan economists discard prior recession prediction, foresee U.S. economic resilience. The president of a New Delhi-based think tank believes that World War III has already begun. He also anticipates the BRICS economic bloc merging with the Shanghai Cooperation Organization, SCO. Elon Musk says X has no plans of launching token.
Feels like a grid down and a money down and a telecoms down and a everything down potential period. You have to prepare as if all networks that you rely on will be disabled for a while. Would you concur with that?
Yeah, I absolutely agree. And when I say self-reliance, I'm talking about everything, your entire lifestyle. And I've actually suggested to people one way to find out if you have a plan that's going to work is go home on a Friday night and turn everything off. Turn your water off. Turn your electricity off. Turn your internet off, because internet's not going to work. Live like a caveman for a weekend and find out where the holes in your plan is or are.
There's nothing. The military does drills for a reason, and many people will point out that many false flags attacks are started in lieu of drills or preparation before. There's nothing like finding out by testing first, and that's a very sound approach as well. Currency and money. Is gold and silver the only solution for you, Bill? Or are you tempted by the blockchain digitization aspect of the new world order money they seem to be seducing us with as well?
Well, blockchain is obviously going to come. That's where the governments want it to go. Yeah. And just understand that with the central bank digital currencies, that is, it's a way to enslave the population. For instance, the conversation you and I are having today would get our accounts shut off. And they have the ability to do that with a central bank digital currency. So it's important to not have, to have something other than a digital currency that you'll be able to rely on, use, spend, trade, barter, what have you.
What's happening in the crypto market? Let's take a quick look at those technical analysis. Bitcoin, BTC, dropped to below the $29,000 level on Saturday as traders continued to digest the latest non-farm payrolls report. Following a high of $29,302.08 on Friday, BTC USD slipped to a bottom of $28,885.34 earlier in today's session. This was the first time since Tuesday that the world's largest cryptocurrency had fallen below $29,000. Saturday's decline came as the Relative Strength Index, RSI, moved to a long-term support level of 42.00. The index is tracking marginally below this point as bears attempt to maintain the downward momentum. However, the price has since consolidated and as of writing is trading above today's low with a current price of $29,022.59. That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.